Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everyone, and welcome to this Wednesday pre-market prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. We are just in a seesaw kind of a market. You go down on Tuesday, you go up on Wednesday. Maybe you go down on Thursday, you go up on Friday. That's the theme of today's show, is just whipsaw action from yesterday's sell-off into the close. We got a little bit of a contradictory tweet from the president overnight. What else is new there? But yeah, just I guess buy the dip, wins again, at least temporarily. So we've got some individual movers, but that'll be the theme here. Our guest is Ivan Feinseth. He is from Tigress Financial Partners. He will join the show at 8:35. In the meantime, hit that like button, hit that subscribe button. We appreciate that. Joel, give us an update here. What exactly is the deal with this market?
Say hello to the 3,300 handle, folks. We're going to be spending a lot of time here, maybe a little bit above 3,400, like yesterday, 34.2175, yesterday's high. Sold off 20 handles after the 415 close, but you know what? The buy to dippers came in right away, trading at the highs of the pre-market session, 78.50 up 25 handles. So not much resistance. I'll go with Monday's close at 33.93 as a potential target on the long side. Bad day for crude, up and down again. Today down $1.03 at 39.64. Gold back under 1,900, down $16.30 at 18.9250. Silver in the red by 21.6 cents at 23.705, and Bitcoin just not moving. Maybe we'll have to wait till Thanksgiving. That's up $55 at 10,685. Well, when you talk about buying the dip and selling the rip, I guess you got to be flexible on your time frame, right, Triple D?
Not really. You don't have to be flexible at all. It applies to all time frames here, Joel. And we've been talking about the fade trade. And, you know, if you're chasing in this type of market, we've been calling for chop. And that is exactly what you're getting. So it doesn't depend at all on your time frame. I would say buy the dip and sell the rip works almost in all time frames. And it worked intraday yesterday. Everybody buying. We're up through 340. We're in breakout mode. Yay, stimulus party. Oh, no, there's no stimulus. And I'll say kaplooey. We close near the lows. We go down more after hours. What happens? Oh, we got a tweet because the president can't have the market going down. So he's got to come out with his tweet to defend the market. And obviously says, no, we've got, potential, stimulus here happening, and airlines potentially. And, they just have to sign the bill. So the market rips back higher. So here we are, what we talked about is it's going to be choppy. We're like, remember the China trade deal? Yep. No deal, no deal. And all the chop we had for like a year in there. Welcome to the chop fest. And if you were buying rips and selling dips, you were doing it backwards. The name of the game is sell the rip and buy the dip, not sell the dip. So yesterday's dip, another buying opportunity. Yesterday's rip, another selling opportunity. We're in the middle of nowhere here right now. But you get up to 340 on SPY again, I think you run into a wall of sellers. So not chasing. Don't chase in this market.
I wonder how many closes we're going to have at 33.50. Right in between 3,300 and 3,400. There'd be a lot. I mean, you got up yesterday you got up above it, and today you're up 23 handles. We'll see if this rally can hold. Just keep an eye on your Twitter feed. If I don't see how a stimulus deal gets done before the election, but even knowing that, who knows where the hell this market's going to go, right? With all the other factors, but we can't control that. We certainly can't control Trump's Twitter feed, but we can control, and we can look at the offering price here in DraftKings. And boy, oh boy,
yep. If it's the stock of the day. What did we say yesterday on the show?
Wait for the price.
Wait
How
for the
could
price.
you do anything before the price?
Stock was $60 and people are like, are you buying the dip? And I mean, the name of the game is buy the dip, but not when you've got a pending offering price, because that is going to act like a magnet. And I was like, what if they price this at like 58 or even 55? You know, the stock's going to go down significantly. They didn't price it at 58 or 55. They priced it at 52. And now you're in the 52 handle. Shocking. It's a magnet. It pulls the price down. Can it bounce off 52? So now, if you're so inclined to buy the dip, now is a better time to strike. But we got some bad NFL news, so we got some stuff happening, so it makes it a little bit scarier. But at least you have a price. At least you've got the 52 price here. So you save yourself $7 or $8. I was going to try to buy the dip, and I actually did, and then I turned around and hit it because of that news, obviously. We haven't quite got down to the 52 price here yet. I think we're going to test it. We probably go through it, maybe spook out a few arbs. Does it hold is the question. But, you know, the NFL headline is no good here either. Spencer, give us that.
Yeah, you got a couple of bad headlines here for DraftKings. Positive tests for coronavirus on the Patriots and the Titans. The Titans test is being rerun this morning, but it's not looking good. I'm not sure if they'll ever be able to play a game again at this rate. They haven't gone a few days without a test since they had the outbreak. And then on the Patriots, another player is tested positive. It's the third player on the Patriots to test positive. So now you've got two NFL teams, which we know is the NFL is essentially the driving force behind DraftKings in a way. Two NFL teams dealing with outbreaks now, positive tests, and the implications of that are season could be disrupted, and we'll go from there.
We've got a number. We got the 52. We have precedence. Penn bounced off of its offering price and went straight back up. Can DraftKings do the same? They're obviously the wild card here is how many more players are going to continue to, you know, show up with COVID, and is the NFL season potentially in jeopardy if it continues to spread? That's the wild card. If that happens, the stock's going to continue lower. I don't care what the arbitrage is. So, but we do have a price. We do have 52. We are testing it right now. 52.12. I would imagine we're going to cut through it because there's going to be some people defending it, but it's so heavy right now. I'd imagine you're going to cut through it and maybe shake out some of the Rs. People saying, okay, I'm safe at 52.10. I'm safe at 52.10. And then they're going to go down, take it to 51, maybe even to 50, spook all those out, and then maybe eventually bounce it. But I would be more inclined to buy the dip here from an arbitrage perspective if it didn't have all this headline stuff going on with the NFL. That's the unknown. How much are they going to price that in? Penn Gaming holding up fairly well considering it's not really down at all. So obviously you can see the heavyweight of DKNG today is obviously the offering price.
How long were you in? Because you got up.
I got hit on it.
I say you're in it. I bet you're in it like 14 seconds.
About a minute.
Oh.
Less than a minute. No, about a minute. I was in the trade and I'm like, no, it's too heavy. So I wasn't paying attention. I'm doing a lot of different things. I was bouncing around, actually getting ready for the show. And then boom, I was in the higher, I was at just around 53. So I was like, I might buy us a buck up from the offering price, give it a shot. And then I got hit. I'm like, oh, there's a bad NFL headline. So I just turned around and hit the bid. And you got to be able to just say, hey, get out. You know, you're wrong. I moved on. You know, I lost 30 cents, I think, on the trade, which sucks. But I don't want to sit around here and wait for this thing to become a big loser because there's an NFL headline here that I'm not sure about. And man, we bounced right off the 52 the first time, but I still think you're going to probably take it out today.
I mean, it's really hard to go, you know, technicals on this when you have a number like that. The number's 52, right?
Yeah.
And so I'm not even going to give any of the other daily support levels. The only reason that you wouldn't like be loving it here at 52 is because maybe there's not that much interest, right? Maybe
there's interest.
If it's undersubscribed.
No, that's not even.
You think so?
You don't think it's already done. The pricing's done, so that's where they've had to come and meet. They didn't say that they would have had that already in the press release, Joel. So if it was undersubscribed, it would have been. And it didn't say anything about being undersubscribed. Did it, Spencer? I didn't read it.
Okay.
I saw 52.
Didn't see anything.
Usually, like it would say it right away. Oh, we couldn't get enough buyers, so we're undersubscribed here. So that would already be done. They've already priced it, Joel. So it's already off. You know, it's just about now. You know, the Arbs who got the stock at 52, maybe were selling last night at 54, 55. You know, shorting it because they knew they got the allocation.
Right.
But you know, maybe they didn't know they got the allocation till this morning, and now they're like, oh, any Arb that's coming in there now. Shorting it is only making 20 cents, so you're not doing as well.
Yep.
Not doing as well with it. It's still worth it as 20 cents, but you know, that's what brings it down. The natural arbitrage is people who get the stock at 52 are like taking the free money and they turn around and become natural sellers. So what the arbs do is they short the stock at 54, 55, anticipating there's gonna be a lot of people who just bought this 52 and they're gonna put selling pressure on the stock. Sometimes it's not as much selling pressure as maybe, you know, a positive story, and that's why pen gaming takes off. But right now the story has turned negative because of the NFL, and that's the wild card here. So it's getting defended at 52, which is not surprising. We'll see what happens if the arbs continue to defend the 52 level or if they lose it.
All right, let's talk about a retailer. Another retailer beats here, and I wasn't all that surprised. We were talking about Levi's here and how the retailers have been ripping. How much did they beat by, Spencer?
Yeah, the earnings were good. Again, I think estimates are a little bit off, out of whack because of the entire year. But EPS 8 cents versus a 22-cent loss estimate. Sales 1.06 billion versus $822 million. So a beat for the earnings. They also gave guidance on their conference call. They see Q4 earnings per share at around 15 cents, which is in line. Sales down 14 to 15% on a year-over-year basis.
Nice pop, pre-market high. I was so wrong when I did my analysis in triple BY. I thought I saw a pre-market seller here. I'm gonna go for the flip side on this one. I'm gonna reverse. Initial spike, 1677 and 1677. You got up there again, but I think, if you clear that out, clear 17 and keep on going. If it does anything that triple BY did. So use 1677. That's my number of the day. That's all I got for you. Did you trade that one at all, Dennis? Or?
No, I had it in the run up ahead of the earnings report, but I didn't take it through. And
yeah,
we kind of thought that they might, continue to squeeze them, but then we looked at the short interest and it wasn't as high as we thought it would be. But some of these retailers are getting love right now. It's separation here happening.
Yeah, just for no specific reason, but they are. So
it's very selective. You're seeing some retailers, like we talked about, Bed Bath & Beyond, L Brands. It's a nonstop bid, and that was a bit of a short squeeze. It's just now turned into FOMO, people jumping in there. Can Levi turn into the same thing? Maybe. I'm not naturally just fading it because I've seen some strength in individual retailers. Overall, I used to look at Kohl's, Nordstrom. These things are all in the gutter. They're all getting a little bit of a lift here this morning because obviously the stimulus talks is lifting anything with the reopening play. The stocks that have been in trouble. And if you want to just go back and talk that for a minute, the airlines are ripping higher. So they sell off significantly yesterday when, stimulus talks are over. So we're going to slam those stocks. And now, and they get an actual mention from the president, the airlines. So that's why you're seeing the airlines bounce back even more. We got AAL trading up 3.5%. We got JetBlue, which actually catches an upgrade here today as well, trading up over 6%. You got UAL trading up 4.5%. You got Alaska trading up 3.6%. The only one not participating as much as LUV because it caught a downgrade, but it's still up 1.8% too. So airlines getting the lift. That's all thanks to the president's tweet.
Yeah, there is some interesting levels here, just based on the dailies. If you get up near 38 in ALK, keep an eye on that. I spot 4 highs in that area. Quick spike over that level was faded, maybe because of the downgrade. Delta kind of hanging in there, trading at 32.20, looking to fill a gap up near $33. If you're looking, that'd be a pretty big move for Delta. United, UAL trading up just under 37. 37 is an interesting number because you gapped down from that area and then you touched it yesterday. So pretty wide open here between 37 and where we're trading at. We're already trading at 30, 36, 39. Let's see if you can clear 37 in UAL. What about the cruise lines? Are they getting a lift?
A little bit. You're seeing CCL, NCLH. They didn't get the specific mention here, but they're all getting a lift. Boeing's getting a lift. All the reopening stocks, you can look just IWM versus the QQQ, and you can see it there too. IWM up 1.3%, QQQ up only up 0.8%. So you can see it directly. DraftKings too, just to go back, is indeed through the 52. ARBs are like, 51.66. They weren't listening to pre-market prep because we told you it was going to go through there. It's just too heavy. That's just tape reading. You're like, it's too heavy.
Yeah, you could feel
it's kind of hanging on, but you could just feel it. I wouldn't be surprised they take this thing down to 50. So that's why I'm you know, if they didn't have this NFL headline, I'd be buying a 52. But with the NFL headline, it's too much unknown. There's too many people spooked. I think it does eventually bounce back. I think the people buying it today are going to be okay, I think. But I'm not doing it because you're catching the fallen knife. There's a lot of bad news here right now. And now if you catch the ARBs and you start to get this thing under 51, then you got arbitrage players that are actually getting hit. So the people who were selling last night, the smart ARBs, were the ones that were making the money when the offering came out and they were hitting the 55 bid. So that's the smart money.
Penn's starting to leak. Yeah, Penn's starting to leak a little bit too here.
Is it red?
Yeah, red by
Penn has
22.
went to the red too. I was saying that to you this morning too, Spencer. Like, why is Penn still up? I should have just been hitting the bid and not saying anything else about it.
I told you. So yeah,
just go ahead and hit the bid.
Typically, Penn and DraftKings trade together, and they're the only stocks that I can really think of that will move, that have any kind of correlation to headlines or news in like the broader sports
for sure
world. I can't think of any other stock.
LCA, obviously, I own LCA. I've had this for a bit. It's not looking great. I'm still up in it, but it's not looking great at all.
You've held that one forever.
Well, it's only been out for a couple months, but forever for me. It's a long-term investment for me.
I'm surprised you didn't get itchy over 18 like that.
I did. I was trying to hold on to it. People say I sell everything too early, and look what happens to me. I watch all my gain go away. That's telling me. So, you know, it's selective perception to a certain extent. Like when I'm doing the longer term stuff and I book the gain, I always remember the one that goes up, but I don't remember the one that, you know, I sold well. You know, like for instance, remember US Steel I had, for instance. Remember that? You know, there's one if you held it.
You're really
yeah, I had it at like 25 and I wrote it to 40. And I'm like, you know what? I don't like it up here. It topped out here before, and I sold it out at 40, and I never bought it. It's at $7. So there's some cases where an actual sale, you know, in this up tape that we've had a relentless up market, sometimes sales, you know, actually do work out. So, you know, and I always talk about the ones that, you know, I didn't hold on to long enough. Well, that was one that was good to get out of and book the gain.
S&P's just relentless this morning. You're in an area where you just, I mean, like when I say there's nothing up to 33.93, I mean there's nothing up there to 33.93. We carved through it yesterday.
Yeah.
And now it's, I tell you, people are just, I mean, technical levels are just they're just taking such a back seat to all the news right now. But we'll see. Up 27.25. We were at the high of the session. I don't know if Trump looks at technical analysis or what, but I mean, we were right at the high of the day when that happened, and I'm like, you know, you could tell like when there's moves, like okay, a big seller came in, knocked it down 5 points. It was like 5 points, 10 points, 15, 20, 25, and then of course you see the tweet coming through.
Yeah.
I want to talk. I know you guys love the SPACs, so I want to know where you guys are backing up the truck here in Helion. Did you see this thing since it became a real stock?
What's this new symbol?
HYLN.
I hate it when they change the symbols because I have to change my whole universe for it, and you know, and then it falls out of the universe. So this was the SHLL, Spencer.
Yes. Yep.
And Spencer sold this. I believe it just obviously just changed names. So you sold this while Mr. Israel.
I sold this at 38 or 36, somewhere in the mid.
Well, you didn't get out at the 50s when we were like really like, but anyways, you tried to hold on. So good for you for trying to hold on. Good for you for also getting out when the breakdown started. The sell was the bounce. I mean, we had a bounce in all these SPACs when it went, you know, we had SPAC washout day down to 33.21 back on the 24th. And then 3 days later, you bounced and you got almost all those losses back in a lot of the SPACs. And that was the selling opportunity. SPAC attack, the SPAC's telling you right now, the luster has faded significantly off of these things. And I'm in a few and I'm like looking and I'm like, you know what? I don't know, man. Like the ones that I have left, I have SPAQ. I have LCA. I also have this smaller one, which I might just get rid of. I've been sitting around with. I'm not even going to say it because I don't want to move. But you know, there's a few of these plays out there that I just don't know about now. Like it's like everything's SPAC. You were just buying them and you were making money, and it's like everybody's losing money in these things now, and they've turned. Like people who are buying every SPAC, you know, thinking, oh yeah, it's gonna, you know, this one's gonna become this and this is gonna become this. I mean, here you have an example of one that becomes the stock, SHLL becomes Helion. What day did it do that, Spencer? HYLN. What day did it actually become the stock?
It was the second, right, Spencer? Because I did an article on it.
Exactly. It was Friday. Yep.
It was Friday. Actually, I did.
And the stock's been straight down since.
Yeah, I did this as the stock of the day, and it's so funny because I said everyone had to be in them. It was free money, right? It was.
It felt like it. I would have been playing them all alongside too. They've all just been running. But you know
day trade these though, do you? They're just
I day trade everything. Okay, so just to clarify, I stay away from some stuff in my longer term investment portfolio. I day trade everything. Every single stock, no matter what, I day trade it. So if I think there's an edge, if I see SPACs hot, I will go and start buying SPACs. So I day trade, like people say, oh, no, I stay away from Tesla. I day trade Tesla almost every single day, not a word of a lie. I'm in and out of it. So I day trade everything. Somebody else was saying, oh, if you trade less, you make more money. Maybe. I'll tell you, that's not the case for me. I trade more, I make more money because I'm putting statistical edges on everything. So if I have an edge of 1%, if I think I can make on an edge against, like if I'm doing an arbitrage trade, if I can make like 0.2% on something, I'll take the trade. Because why not? I don't need to make 20% on all my trades. If I make 0.2% on something, I'll do it. I mean, I'm not, obviously, prop trader, you're not, you don't have the expenses, you don't have to worry about as much. But I mean, with free trading out there too, Robinhood, it's,
right.
A lot of you guys don't have commissions anymore either. So I think, there's opportunities in everything. And day trading, I day trade everything.
I'm going to reveal Dennis's secret here. And what he does is he has a big bowl of letters next to him. And he said, oh, what should I trade today? He doesn't look at anything. And he goes,
he can reach into the bowl.
If he's really feeling, he'll go 4 symbols, 3 symbols. He'll never do 5 symbols because he doesn't trade pink sheets. But that's what
you're right. I don't trade everything. I don't like 5 symbols. When it's 5 symbols, I'm turned off on it. Maybe LSXMA, Liberty Media, I might trade, but it's listed though. But for the most part, you're right. I stay away from 5 symbols.
I just real quick, you mentioned Tesla here, and I kept like this 450 area. It just doesn't seem like it wants to go through there, nor does it want to take out 400. The closing price on the day before the split was like 440. This is winding up because you traded 400 to 450 for a while. You had the one dip, but this is a period where you haven't had this kind of consolidation, and this is it's a 50-point range, but Tesla's winded up here. I know Raz was looking for some big announcements here, but really interesting. I mean, trading range, $50 trading range, albeit, but we'll see. Bust above 400, 450, take out 500, go to 550, or I don't know, maybe just like Mr. Market, See,
I think I'll go the other way because we've been saying, I think you're selling rips and buying dips. I think this thing gets to 440, 450. People saying, oh, it's going to break out. I think they lose money. Right. So I think as you get up near 440, 450, you're selling it. As you get down maybe near 400, maybe below it, you're buying it. You're just going to continue to buy the dip and sell the rip. This is a contrarian's market right now. Headline driven, deal, no deal, stimulus. This is my kind of market. It's kind of your kind of market too, Joel, because you're a natural contrarian too as a trader. I know you buy and hold stuff forever, and that's worked really well for you. You seem to be a lot better investor than I am. But from a trading perspective, I know you always were a natural contrarian. And this is a contrarian's market. What's contrarian mean for traders who are new? It's the trader that is fading the trade. So stocks up 3-4%, it's up too much, I'm going to short it. Stocks down 3-4%, it's down too much, I'm going to buy it. That has not worked that well really in the last decade. It's been a momentum market. Stocks that are hot get hotter, stocks that are cold get colder. But in this little short-term times where it did work well, and we had it for about a year there in like 2018, when we had deal, no deal on the trade deal, deal, no deal, deal, no deal. I mean, maybe it was later 2019 too, we had that as well. But now we're at a point here where it's the same thing, at least for the next month. It's deal, stimulus deal, no deal, deal, no deal. And we're going to rip higher on potential talks. Oh, and the potential talks falling off and we're going to sell off. So I think the fade trade continues to win here. So I'm going to go with what I said a week and a half ago. Chop is the name of the game. I think chop continues. Christian Fromhertz agreed with me. You agreed with me. Why change that strategy? Because it is working perfectly right now.
Yeah, one more, until the election. All right, S&P's snuck up to 82.25, so that's your pre-market high in the green. And I mean, you're looking at up 26 handles, but in reality, we're up almost 50 handles, right? From the because they tagged this thing between 4:30 and 5. They got it down to I believe
From the lows.
yeah, they really tagged it, and then someone was just convinced the after hours low was 30-30-50. So 50-point rally here, and that's a big move overnight. Buy the dippers prevailing here. Spencer, what we covered the earnings. There's a lot of ratings out there. It seems like Barkley seems to have some opinions on the retailers.
Yeah, big note from them. Let's see. They're upgrading American Eagle to overweight, upgrading Foot Locker to overweight, upgrading Contour Brands, KTB to overweight, Urban Outfitters to overweight. Who else did they do this morning? PVH called a downgrade to underweight or sell. That's probably the most notable downgrade. Ralph Lauren to neutral. I think that's it.
They're looking at L Brands. They're looking at the Levi earnings. They're looking at Bed Bath & Beyond, and they're thinking retail's going to get hot. And we want to pick on these retailers that haven't been working, because the ones that haven't been working for the last couple of years are starting to work. So I think that's what they're looking at. And they're trying to pick the next Bed Bath & Beyond. Is it American Eagle Outfitters? I don't know about that, but I mean, I didn't think it was Bed Bath & Beyond either. You know, I've always joked the Bed Bath & Beyond, but now Kramer's getting on the bandwagon, and he's been tooting the horn for BBBY, and that continues to power it higher. You know, I will say, if you're coming at Bed Bath & Beyond now, I mean, it's 21. Maybe it continues. Maybe it pulls the L Brands and continues to go up. Like Kramer's trying to say this is like an online play now. They've changed everything. They got new management. This is, you know, like a new Wayfair type of, you know, company here. And I don't know. I think they still have a lot of physical stores.
Yeah. You know, what'd be interesting too is I wonder when their leases are up. You know,
well, and there's something too. I mean, some of these physical stores need to close locations. They, you know, they're just too big. I mean, these Bed Bath & Beyond stores are huge. A lot of them are mall based or near the malls. I mean, it's been an impressive move. Richard Johnson saying, come on, it's up 500%. I know been a really impressive move, and we've got it wrong. Although, did we really get it wrong? Because we've hated this thing since 35. We just never got on the bandwagon and stopped hating it. I don't know.
Mike
I don't
Brown.
know if I can come here when it's $5, and it's a good point. It was $3 back in April. It's 20. Is this a real turnaround story? Is this like your new online shopping experience, and people are going to stop buying some stuff on Amazon to go buy it on Bed Bath & Beyond? I have trouble buying that story. That's why I'm probably not getting on the bull train here again. I don't want to be on the bear train on it, because it's getting this whole online, you know, like Kramer too, like I said, is basically saying this is an online company here now. I just don't know how they converted that fast, but you know, whatever. If the market starts to see it that way, you know, Andrew left, Mitch has said the same thing. Story is what matters. The story starts to get to Bed Bath & Beyond is an online company. You know, we didn't see RH going that way either, and RH, you know, turned it around too by, you know, obviously getting a huge online presence and doing their stuff that way. So I think I'm more neutral on it here, but I can't get on the bandwagon and start buying it up here.
RH, you got a straight print. Well, 368.65, but look at all those highs above 380 there. Holy mackerel. That's kept a lid on this. So I'd look for some downside here until you can press through. I mean, they're not going to be as close. It's actually 388 is the level. But Mike Brown, he keeps trying to get me to sell my L Brands. And look at that, Dennis. Quad top there, 33.50. Now I'm a little bit worried. Look at that, 33.46, 33.43, 48, and 57. And similarly, holding 32 on the downside, close 32.30. So trend is still up, but man,
I still can't believe this has come back this far. I had this tagged for like a single digit stock. I had it tagged for a single digit stock a long time ago. I had the stock. Remember, we both bought it around the same time. We both bought around $35, and I was like, you know what? I don't like this story. And I turned around and sold it and basically just scratched it out. But you were like, nah, I still believe, and you held it. It's come all the way back for you here, Joel, and you like basically got your money back in this puppy. I don't know if you added to the position or not lower, but you're back. And you look at this and you think, is this a real turnaround story, or is just a squeeze? That's the question. Is L Brands, is everybody going online to buy their lingerie? Spencer, what are your thoughts? You've been quiet here in the background. Are you going on L Brands to buy lingerie? I hope not. Victoria's Secret's online.
Well, I would if I got my stimulus check, but no, I know right now.
That's a no right now. If you get your stimulus check, you're
if I
going over to Victoria's Secrets to get your lingerie.
Different story, but no.
I don't know.
Yeah, I mean, I'm with you guys. I also don't understand it, and so I don't know what.
I haven't understood the rally. I think it started as a short squeeze, and it just turned into FOMO. Yeah, it's like, this is a real turnaround story. Everybody's buying lingerie all of a sudden.
Well, so they
we don't care. They're all mall based.
Wait, they never sold Victoria's Secret, right? They tried to, and they right. I'm pretty sure that's what happened. They tried to sell it, and that got called off. So they're stuck with this asset that they don't want. I don't know.
Well, it seems to be good. Were we sleeping on the Lilly news here? Emergency.
What is Lilly saying?
Emergency use authorization of a new combo antibody therapy.
Do we get 5 of these a day? Well, for real?
No. The news is that they submitted something. They weren't granted anything. They submitted
it. Yeah.
Every drug company in the whole, hey, newsflash, every drug company in the whole entire world is working on COVID. It's kind of true. Yeah. So, boom, Lilly's working on it too. Bye. I mean, this is a story all of a sudden. Story trumps all. This is Lilly, big stock. Probably never going to hit the bottom line on this. I'd be fading this.
Just got up to
I will be fading this. I might be fading this. 150. Where did we get to, Joel?
150 right on the kisser.
Yeah. Okay. So I think that's a fantastic selling opportunity.
This is kind of a bit in the doldrums here, huh? 170 to 145. I mean, not really falling into any category. I mean, it's value, right? It's not tech. I don't know. Some of these stocks. How's Merck looking? I haven't looked at these healthcare.
The drug stocks have been in the gutter.
Yeah.
I mean, you have, they've been going down. So what do we say? When stocks start new downtrends, you sell reps. Lilly is in a clear downtrend here from 170 down to 145. I think this pop on this COVID headline, it's just bots. It's people excited. It's like, oh yeah, this is going to go to 170. No, it's not. It's not going to 160. I don't think it's going to 155. I'm not even sure it's going to go back to 150 that just hit 5 minutes ago. My opinion, Lilly, good company, out of favor here right now.
Yeah,
now you get a counter move in a downtrend. Textbook says I sell this pop. It works. It might not work. It doesn't work 100% of the time, but 50% of the time, it works every time. I had to throw that one in, but it doesn't work 100% of the time.
We're gonna have Ivan Feinseth here in a couple of minutes. I'm PreMarket Prep. He's from Tigress Financial Partners. I want to just discuss Apple real fast. They were part of the report from the House Antitrust Committee yesterday, basically saying what we all know to be true, that big tech has become perhaps too big. But also they announced that October 13th is the date of their iPhone event. Apple typically trades higher into
what's the date?
October 13th.
Put it on your calendar. You buy this thing October 11th, maybe October 12th, just ahead of it, and then you sell it ahead of the event. There is alpha extracted there. Again, doesn't work 100% of the time, but it works a lot of the time. So I would write that on my calendar, October 13th, 1 o'clock. Usually 1 p.m.
Yeah, it's always 10 a.m. Pacific.
Yeah, so. Okay. Put that in your calendar. If you're trading, put that in your calendar right now. And I would say we're going to relook at this and look at this. Let's look at the calendar.
You can look now, and because typically,
I would say maybe over the weekend even. Like I look at taking it home on the 9th because maybe it gets a little bit of talking, but definitely on the 12th. You probably see life on this in the 12th and running up into the event. Obviously, if the market tanks, that's a different story. So that's why I always hedge myself, and people don't understand. People are asking questions about hedge trading. I mean, I'm trying to extract alpha from an event. If the market rolls over and gets killed, I'm not going to extract any alpha at all. So when I buy it, I maybe short Qs against it, and then you're just trying to extract the difference. Okay, I think Apple's going to be strong relative to the Qs because of the event. You know, you don't have to get all fancy though. That's just protecting myself in case I get a sell-off in the market.
Right. Kind of just like the market here. Apple just winding up in a trading range. Pair of lows at 112.22 and 112.25. So there's your support. Sellers, I'd say the capped at 116.65. That was your 2-day high. Yesterday's high 16.12. So 112, maybe try and pick it up 112 and a half, 113 ahead of it, and look at this 116.65 as resistance. But pretty quiet here for Apple. Usually don't see it in that kind of a trading range since it made that low just under 105. You got Ivan there for us?
We do. Ivan Feinseth is a partner and CIO at Tigress Financial Partners. Ivan, good morning.
How are you?
We are okay. How are you dealing with this back and forth, sell the rip, buy the dip market?
I still say buy the dips. I'm not so much selling the rips, a little bit, but you got to buy the dips.
You're thinking longer term past the election. I guess I was talking about short term into the election, but you're thinking beyond that.
Well, yeah, I think a little surprised in what Trump did yesterday. The market wants a stimulus package, but his coming down with COVID-19 has weakened him, but you can't count him out. I mean, Biden is leading in the polls because now the feeling is that we could get a massive stimulus package once Biden is in office, that the Democrats will dramatically try to spend the way out of this pandemic driven recession.
Do you think one way or the other volatility will come down after the election? And we will be in more of a defined trend?
I think that I don't know if volatility will come down. I think once we get over the hump, we have two issues. Is the election is the next kind of point of uncertainty, and then this whole thought about whether we will have definitive results or not, and how long that gets challenged, and if we go into a period like in 2000, and even potentially go past January 20th. I think there's a low probability of that. I'm still calling for a Trump win, as crazy as it is. He trailed in the polls in 2016. I know he's more crazy today than he was in 2016, but I think that the incumbent advantage is very powerful. Historically, if the S&P 500 has been up during the prior 3 months into the election, so August, September, October, it is still up for that period. And I think we will get a stimulus package. I mean, President Trump's the ultimate Soviet negotiator who, pounds the table and walks away from the table and then comes back. I mean, he just did it last night. So he needs a stimulus package too. It will help the economy. He has said for his whole term he wants to be judged by the stock market. But it is surprising sometimes that he does things in his own worst interests that can torpedo the market, like last night.
Ivan, I want to get your thoughts on a couple of stocks that are on your radar. You like McDonald's here. They had a press release this morning. I guess they're expanding their breakfast menu, which would imply that they are expecting more people to be eating out in the coming weeks and months. But you like McDonald's here. Why?
Execution. The focus on tech, the focus on drive-through, the focus on curbside pickup, and the fact that people are getting tired of eating at home. People want to go out. And
yeah, but to McDonald's though?
Yes. The Egg McMuffin is just a culinary masterpiece. The beauty is in its simplicity, but it is delicious.
I have to throw a comment in here. When I do get out of the house and go somewhere, you go by, and I've just been the old reliable indicator. the drive-through lines at these places are unbelievable.
Excellent point.
Everywhere. I mean,
Yes.
McDonald's, Tim Hortons, Starbucks. I mean, people.
And Taco Bell too. The line near me at Taco Bell, Wendy's. I mean, my three favorite fast food or quick casual stocks are McDonald's, Wendy's, and Yum Brands, which owns Taco Bell. And the line at Taco Bell is the biggest, but McDonald's and all of these have long. I'm surprised at the line at Starbucks. I mean, I think you're going to wait. Looks like an hour in line for a cup of coffee. You'll drink in, I guess, in a few minutes. But people do like Starbucks, and people are getting out more. People are been cooped up at home. They want to get out. People are tired of cooking. That's been one of the theses behind the recent surge and the coming surge in McDonald's. The consumer, I mean, we live in this pandemic and this mask wearing environment, but people do want to get out.
Yeah, I can also second the lines at Starbucks. They are a bit excessive. You also like Facebook here. They're, of course, part of this continuing investigation into the overreach of tech and whether or not these companies should be broken up. But Facebook also had a PR of their own. Yesterday, they announced that Netflix and Zoom are being integrated into Facebook, and you into the Facebook. Right, just into Facebook. And you still like Facebook here?
Absolutely. You got three huge trends. One is more people are connecting on Facebook during this pandemic. That will continue. Two, they continue to incorporate more within Facebook that keeps you in Facebook. The whole point of Netflix being there is that you can tell your friends the programs you like, talk about what's going on in the programs. I mean, one of the big programs right now is Cobra Kai. It was originally produced on YouTube. It moved to Netflix. It has caught fire, and people like sharing the experiences. And Facebook is a platform you share experiences. And the third is Facebook is going to go very big into e-commerce. It is going to be an e-commerce and e-shopping and an e-payment platform. And these are all powerful drivers. Look, they have 3 billion monthly active users, and it's where advertisers want to go. They offer the best measure of return on advertised invested dollar because it's a targeted platform. So the advertisers want to go to where the people are. People want to go to where the people are, and they're going to continue to get big. And it's sad that being big is bad, but it will continue to grow.
You don't see any risk that down the line, 2, 3, 4 years from now, we do get some sort of definitive antitrust ruling and saying, Facebook, you need to sell WhatsApp. Amazon, you need to do this. Apple, you need to do that.
If you look at the history that, Wall Street tends to push companies to spin off things. So if Amazon were to spin off their web company into a separate stock, that would be a bonanza. That wouldn't be a negative. People would love to have that so they could have the transparency into that line of business, which is a fast-growing, highly profitable, powerful business. Sure. So I don't know that the end results of having these companies break up into separate companies would be the worst thing that would happen for them. Because at some point, things do get so big, it becomes unruly, unmanageable, unmeasurable, and unmanageable. So I don't look at that being a negative.
And what about Caterpillar here? We're pretty much at the same price we were 2 years ago in this stock. They did announce a small acquisition on Monday, but you like Caterpillar here, right?
Yes. I mean, the stock in what is a very challenging economic time it's at a 52-week high. It's about to break out, and any economic stimulus bill from either party is going to include massive infrastructure spending. I mean, we need it. We need to upgrade the power grid. We need the roads and bridges still need to be repaired. There's so much construction opportunity, and the fact that this big shift in housing from people moving from what they're calling vertical housing into horizontal housing. The housing market is on fire. I mean, who would have thought that some of the industries would be so positively impacted by the pandemic?
Caterpillar is a lesson in that federal raids aren't necessarily a sell the news event, because Caterpillar's offices were raided in March 2017.
Spencer, boy, you are going back. You are going into the old bag of tricks on that one.
Yeah,
that was a long time ago. Yeah,
Caterpillar got that case dismissed, and it was the news of that raid was basically a buying. So.
That was under 100. When was that, Spencer?
Yeah, that was March of 2017. The stock was at like 90-something, $80-something, and yeah, I mean, it just goes to show raids are not necessarily
on bad news.
Yeah, they're not necessarily bad news. So I remember that.
I would think a raid when federal authorities
usually bad.
I don't know if it is as dramatic as it is on TV, where they kick down the door and they run in. I think more they kind of walk in and ask for some documents and things. But yes, right. Buy on bad news. But you know, a lot of this in companies is you know, not that big a deal.
Yeah.
I mean, you know, we don't want to ever see malfeasance and any illegal activities, but I don't think that's the case. But you know, look, Caterpillar is a leader in its field. There's only a few companies that make big, heavy construction equipment. Plus, it's the maintenance of all this equipment and the upgrades, and including advanced technological functions that they're incorporating into all this to monitor and manage and keep these things working. I've been to the Caterpillar test site in Tucson, where they run a completely autonomous work site with these massive bulldozers and dump trucks. It's fascinating to see.
I mean, say something negative. I mean, say what? Like, are you worried about anything? Is there anything that could turn this market negative? I mean, you know, I know the analysts, you know, you're optimistic and everything, but I mean, can you say anything? I mean, we're going to an election, uncertainty, COVID-19. Can you say anything?
The biggest fear of not only the market, but that people have, is that we have another huge resurgence of infections, of COVID-19 cases. You know, it is scary, and having to live in the mask world. But if you look how scary it is, and yet the market and a lot of areas of the economy, it's been said that, look, the cruise industry was doing incredibly well last year, was going to have another record year this year, decimated, no fault of their own. The airline industry, the restaurant industry, the travel industry, the hotel industry, it's sad, but they will come back. You have, you know, people do want to travel and go on vacation and go on cruises. So you have this pent up demand, and I think there's opportunity everywhere. And I would just prefer to look at the opportunity or potential opportunities rather than the negativity. There are certain stocks that have rallied that have surprised me. I'm a little surprised in the strength in Beyond Meat, for example, the valuation, and just the fact that what they do is not all that proprietary. But yes, they have done well in partnering with companies like McDonald's and Starbucks and leading fast food providers. But so there's some stocks that have surprised me, and some stocks that have caught fire because of the pandemic. I mean, I think Peloton did revolutionize in-home fitness, and the pandemic was like lightning striking for them. And they are benefiting, and they are changing how we exercise. Unfortunately, another industry that has been hurt by the pandemic has been the gym industry. And people are going to have spent a lot on in-home fitness, and it's going to continue. And again, look at the companies that are other companies that are benefiting from this, like the vitamin companies, like Nu Skin. Nu Skin twice in the past 2 quarters has raised expectations, because one of the best ways to be healthy is to be healthy. The stronger your immune system is, the healthier you are, the better chance that you can avoid, if you have direct exposure to the pandemic, to the COVID-19 virus, it's not going to be good. But ancillary exposure, if you have a strong immune system, may help you. We're also learning a lot, and not only in-home fitness, but nutrition, but measuring your performance and functions, like with Garmin smartwatches and the pulse ox meter. I mean, your drop in oxygen. Look what happened with President Trump. They said he had a brief drop in the oxygen level in his blood. That's an important thing to monitor. Garmin was one of the first smartwatch companies to incorporate this functionality into their watches. Just the ongoing data and the learning from that to help fend off this. And the other big overhanging potential positive catalyst is a vaccine. If we're going to need a vaccine to get out of this pandemic mess, and it is supposedly very close. We could have the announcement of an effective vaccine as early as the end of this month, get it into production by the end of this year, and that's what will drive 2021.
All right, we'll see. I'm Feinseth, Tigress Financial Partners. Tigress, thanks a lot for the time today.
Thank you.
All right, Dennis, when is the last time you looked at your stock? By your stock, I mean Triple D. Just curious.
It's been a pile of garbage.
Oh,
look at it take off. Yeah.
Oh, what happened?
I don't know.
It's squeezing them a bit.
Wow.
SSYS. I always look at those two. So you got a little 3D printing, again, here's a stock in a clear downtrend and a counter rally. Can it go on for a bit? Maybe, but hard to get excited about 3Ds.
Yeah, what happened to 3D printing? Now people aren't in the office, not printing anymore?
I don't know. It's just been a real, disappointing. I've tried to actually invest in this a couple of times, these stocks, SSYS and 3D, and they're just disaster investments. They just continue to go lower. I mean, this stock was $90 back in 2014 and it's $5. So, SSYS, if we go back, was $130. It's $13. I mean, can this be a turnaround story eventually? Maybe, but I've always said probably the best way if you're really into the 3D printing is still Hewlett Packard, HPQ, because they're going to be involved. They're going to be a big player. If not, they're already probably a big player there. And they got a dividend in there. It's a stable company, 3.68%. So if you really want to get into 3D printing, I'd just go with Hewlett Packard, HPQ.
Turnaround stories can be great if you're willing to wait for a long time.
People have been trying to play the turnaround story in the 3D printing stocks, and I have been one of them multiple times, and they keep getting crushed on it. So hard to get really excited and say, okay, it's different this time.
Look at the camera on the stick, though. That's rallying.
Where's that? $5 now?
Yeah.
Oh, it's up from $2. So that's a pretty good rally from $2. Again, the camera on a stick GoPro, we're talking about $98 back in 2014 when everybody was going to have a camera on the stick. They were going to get 10. Everybody's going to have one for the kids, for their wives, for their dogs, for their pets. They were just going to put GoPros on everything. And it didn't happen. And here it is, down to $5. I mean, these shirts look the same. 3D printing. Everybody's going to 3D print everything. And you would have thought in the COVID environment that 3D printing would have came through with like the masks and with the PPE.
Yeah.
And there was a buzz talking about that, but it never really materialized enough to help these stocks. So if back to March, you'd think, oh, these could be COVID plays because they could 3D print all of the the PPE equipment that we need. And there was talk about that. I think even Kramer had brought 3D systems on saying that. And that was just another selling event there too. And it's just never materialized. So these stocks just huge disappointments.
I have a pair of 3D printed slippers at home that someone sent Benzinga, and they were
who said that?
Are they comfortable?
They were in our office for like a year, and one day Luke just said, Here, Spencer, you can take this home. And so I took them home. I think I've worn them once. They're not bad. They're slippers. I don't really wear them.
What about that camera that was gonna 3D or the company that was gonna 3D organs?
Or Organovo or ONVO? Is that it?
Yeah.
Organovo?
Oh,
Yeah.
that was it. That was it.
Yeah. I mean, that sounds like a cool idea. It sounds like something that could work. It sounds like a stock that could even have a story, but it just never materialized. And now you're looking over the last, couple of years, and it was even out before that. Well, you go out to the monthlies, you can see $96 back in 2016 because they were going to print hearts, they were going to 3D print all the organs that we can't. I mean, it sounds like something I'd like to invest in.
Yeah.
All of this stuff was kind of sexy at the time. It's like it sounded like something I wanted to invest in. It just never worked out.
Oh,
and now there's so many people that are just crushed in these things that you have trouble finding the way that this can be a turnaround story. I mean, I don't know if it can, but I know ONVO. It's the concept sounds awesome.
Well,
so
why invest in 3D printing when you can invest in SPACs? Is my question.
Maybe that took the luster. There was other things, but these 3D printing stocks been such dogs. There's so much overhead supply in all of these stocks because everybody that has bought these stocks in the last 3 years or 5 years is down significant money. And you have people in the hope trade saying, "Oh, eventually it's going to come back. I bought this ONVO at 20. If it ever gets back to 20, I'm going to get out." And you have the person that bought at 10. If it ever gets back to 10, I'm going to get out. That's why it's so hard when they've been down for this many years for stocks to just start ripping higher. So unless they get like a government contract, come and start printing organs, there's a major headline, and I'm alluding to the Kodak thing, with the government contract, that was a gift too. And, Kodak's right back down, obviously. So that was a gift too. And I'm still going to say, I think Kodak's $5 when we look at under $5, when we look at it, I said a year from now, 2 months ago. So I guess I got 10 months left. It's still leaking. So I don't know. The ONVO, I like the best out of the stories on this. Could it get hot again? It has the potential, but trying to time that has been a losing game for a long time.
XONE was in that category too.
XONE is still, where's that one? $12. It's held up a little better than some of the other ones.
Yeah. Okay.
Still, again, though, put it in perspective, go to the month, this is $75. I mean, all of these stocks, he bought them 2013, 14, 15, 16, when 3D printing was going to take over everything, have been dogs.
All right, just made a new high at 84.75, trading 33.80. So holding these gains nicely. A half hour here going into the open. 3 minutes left.
DKNG trying to hold the 52 here, Joel, too.
Yeah,
the ARBs are really trying hard here. It's went through it a couple times. What's the pre-market low? It is like a magnet, though. It's just sticking the 52 right now.
Oh, yeah.
Funny how these prices can become like a magnet like that.
All right, let me, I think
Bill's
I saw
grabbing the pre-market low. I saw like 51.75. I don't know if it got lower than that.
No, not too much. 51.60. And now the bots are just
the ARBs are in there.
Fun.
They're trying. You got people saying, "Okay, I'm safe at 52." In normal, if you didn't have those NFL headlines, I'd say, yeah, I think you're probably safe at 52, but I haven't bought it because I'm just nervous. And maybe this is just blind, close your eyes, don't worry about the NFL headline, and maybe try it, and maybe it bounces. But I think there's another shakeout in here yet. Nervous.
I knew Rave would come up during the show. Did you see this one, Dennis?
What do you got? What stock?
Oh, it's already faded, Spencer.
RAVE?
We should, yeah.
I don't even know what that is. I've never even heard of that. So I say I trade everything.
You trade everything.
I know. I trade everything. I've never made a trade. I don't think in Rave ever.
Do one right now. I don't care if you scratch it.
I don't care. I better trade it right now.
Well, so it's got a 10 million share float. And I don't know what the volume is this morning, but I'm sure it's close to that.
Oh, it's huge.
What is the news?
They just announced a couple new executives. Nothing.
You wish you would have saw this one, Dennis.
Squeeze 101. What? How high did it get?
Oh, I don't want to tell you.
350? Is that right?
382.
Is that right?
It is. It is.
What are people doing?
Well, guess what time it was?
You won't hear, and you know what? On Twitter, you will hear nothing from the person that bought it at 382. They will not be tweeting whatsoever. They are sitting under their desk and saying, "Oh, it's going to come back. It's going to come back. Oh, it's got to come back to 382 because I bought it there." And I tell you,
maybe
it's probably going back to 50 cents eventually.
if you would have got up to in the first 15-minute bracket, 13,000 shares traded, and then when it made the high around 4:30, almost 400,000
I
shares
just
traded.
shake my head. This stuff, these are the stocks that everybody says they make money on, and the 99% lose on these things.
These are
So,
hard.
and you don't hear from the 99%, you only hear from the 1%. You hear from the person that bought it yesterday at 50 cents, and they've had it in their portfolio for 2 months or for 2 years, and they just lucked out that, the bots got silly. There's always a silly stock of the day. Here's your silly stock of the day. It's not, this isn't, a $10, $20 stock. I believe, look at this from 6 months from now, same thing.
Cents.
It's back to 50 cents. 50 cent.
Try 6 days, but all right.
Like the wrapper, 50 cents. 50 cent.
Okay, I apologize. We didn't get to cover any tickers really from the chat, but join us at the 3:40 p.m. show. We will cover a lot more of them. Thanks to all the participation, though. We love the participation in our chat, both on Benzinga Pro, on Benzinga.com, and of course on YouTube. While you're on YouTube, hit that like button, hit that subscribe button.
I'm hitting a like button right now.
Thank you,
186. I'm 186.
That doesn't count if you really
Oh,
can't.
every like counts, Joel. Every
They all
like,
count. We can like our own show, Joel.
every
Okay.
like.
We can like our own. It's okay. Joel, have you ever liked our show before?
No, I haven't.
Joel,
I feel like
we could have
cheating.
been the #1 thing on YouTube if you would have just been hitting the like button more often. And now, because of you, we aren't the #1, but we will be. We're trying to get there.
I feel like that's kind of cheating. But
I
anyways,
feel like it's cheating if you, Spencer. Have you ever liked the show?
Yes, not today. I haven't yet, but
oh, you don't like the show
it because
today?
they're at $2.99. You better like it.
I like the show every day, so
Right.
I not necessarily during the show, but at some point.
Mitch in the background. Do you like the show every day? Mitch, come off mute for a second. You're there. He's watching all the stocks for us here. So Mitch, I want to say my dad says he loves Mitch. My dad watches the show. He loves Mitch. We want to hear from Mitch here. Mitch.
Of course. Gotta like the show every single day.
Mitch likes the show every single day.
Better yet, actually, I like it twice. I like it from my account and from the Benzinga.
I've tried to like it twice, and you know what happens when you like it twice? It takes an unlike. You hit it twice. Now I unliked it, so you can't like it twice. They pull the rug out from under you there. I'd like it twice, but I hit it again, and then I've unliked it, and I'm net zero.
What I'd say for our viewers is watch out for solar today. I seen
solar
stocks on the gappers. So
what do you got for me? Give me. Mitch watches everything. He's there watching the stock. What do you got?
Oh,
we're going overtime. We're going overtime.
Sun W and OPTT are some of the highest gappers today, and so definitely you're going to be seeing a whole bunch of interest in solar plays.
That sun is hot.
Sunworks won a contract this morning, so Sunworks has a catalyst, so maybe
what's the symbol on that one?
SUNW.
Sun W.
Isn't that Sun Microsystems?
It was Joel. Blast from the past. It was the old Sun Microsystems. Remember Sun Microsystems? Where did it go under, or did it get taken over eventually? I know it went way down. Did it eventually get bought, or did it actually go under? I think it got bought, at like $2. It was like 150, and it got bought like $2. Sun Microsystems. Blast from the past.
Yeah, they got bought by Oracle.
Oh, they did. What was the takeout price?
You want
takeover price?
Oh my goodness!
I'm looking. Google knows all. You just Google. Boom. Takeover price.
They paid
$9.50.
All right.
So that was pretty good. Although the stock was like $100 in the tech bubble, so it wasn't good for a lot of people. Next.
Last thing I'd mention is Dennis. You owe me some lunch on work, so.
Oh my goodness,
I'm
Mitch
feeling
wins
hungry.
at that. Mitch, you know what? I got to stop betting against other people. I only bet against Joel because Joel always gives me lunches. So what's going to happen here, Mitch? Tell you how it's going to work. And Spinner gave me the idea on Twitter. We're factoring this out to Joel here because Joel owes me about 25 lunches. So Joel, you owe Mitch
24 because I'm going to.
And the other reason for that is I can't cross the border to get Mitch lunch. You can because you're already over the border with Mitch. So I want you to fly out to Colorado and buy Mitch lunch. Can you do that? Get on an airplane.
I'll drive.
Wear your N95 mask.
I'll drive.
Safe. He's going to drive.
This is from the Carvana bet. So Joel lost that to Dennis. So Joel is gonna.
Joel lost all the bets to me.
Who's gonna pay Mitch?
I know. I've been cold streak. I know.
I'm in a cold streak. So, anyways, Joel owns you a lunch, and he's gonna fly out there to Colorado and get it for you. Or
Oh,
at least
look
Grubhub him. Grubhub him up there. He's in the mountains. It's cold. Send him some hot soup. Just like you remember you sent Tafari, you sent him the hot soup.
You remember that
Mitch,
too? I was just
Mitch
thinking
wants
about
some
it.
hot
Man,
soup.
remember, what was the name of that place in Chicago that had the great she crab soup? I can't remember. Yeah, Fiery and I. You know what? We'll have to dig up Fiery. We haven't heard from him in a while. Maybe maybe I'll get him on next week or something. I'll check it out, Fiery. Okay. All right, 9:05. Spencer, who's our guest tomorrow?
Tomorrow we're talking real estate. Michael Episcope. He runs Origin Investments. They're a real estate investing platform. So we're talking the real estate market on tomorrow's show. Please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a good rest of your day. We will talk to you at 3:40 p.m. Eastern Time.